Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, anything said in this piece is an opinion only. It's not investment advice, not financial advice. I want to focus on that a little bit. Obviously, there is certain individuals think that I might have a biased trend, or I might be biased, or I might be focusing or taking your money, whatever the case may be. That's not the case. I'm not interested in taking anyone's money. It's your account, it's your trading, it's your investment. You can do what you want. You make money, it's yours. You lose money, it's your losses. That's it. This channel is purely for information only, okay? And I'm not saying the information I give or the knowledge I'm giving over is better than anyone else's or worse than anyone else's. There's probably thousands of people who are far more technical, far more knowledgeable, far more professional, and far more better at doing YouTube broadcasts than myself, okay? So I'm not saying I'm the best, and I'm not saying that you listen to me. It's just an opinion. If you want to listen, listen. If you don't want to listen, that's also good. You don't have to listen, okay? So I'm trying to give over as much information from years of experience as possible, all right? To enhance your knowledge, enhance your trading, and hopefully you go and make some money. And if you lose money, then that's not the intention. The intention is for you to make money. If you end up losing money by taking some knowledge from driving markets, that's not the intention. It happens. That's the way markets work. You can never always be on the winning end of an investment or the winning end of a trade. All right, that's generally the background. So the idea of the channel is to give you a bit of education, some knowledge, some background, some technical information, and hopefully make you a more informed trader. All right. Now, today in the US, the markets are closed because it's President's Day, so it's a national holiday. Overall, you can expect equity markets and forex markets to be quiet. There's not really expect them to be quiet. Not a lot is going to happen unless there's a bolt out of the blue or something is going to change dramatically. Overall, I'm going to give a general session as to where I think the markets are going. Okay, so I do believe that equity markets are going down, and there's several reasons for that. Number one, I think we've got persistent inflation. It's difference of opinion if inflation is going to go up or down, but it's going to be persistent. In other words, it's going to be there, and I don't think the interest rates are going to have such a major impact as everyone is expecting. All right, that's number one. Number two, you've got liquidity issues. Liquidity issues means that as interest rates rises and the value of assets has dropped throughout 2022 and 2023, then there's less money available to buy into those stocks and buy into those assets and buy into those different varied currencies or cryptos, whatever the case you want to invest in. So it's a rising interest rates, reduced liquidity. All right. There's also going to be a nervousness in there, but overall, I think corporate earnings are going to fall over 2023, and that's going to cause shares to drop even further. Okay, as much as the companies are battling with their costs, so you've got companies laying off staff like Meta, Amazon, Google, Intel, IBM. All of them are laying off staff in order to cut the costs and make the companies more profitable. Obviously, that is not sufficient because they still have to make money. You can cut costs so far, but you still have to make money. I think corporate earnings are going to go down in 2023. As a result of that, or part of the equation, when I'm talking about a drop in financial markets, that's part of the equation. So corporate earnings are going to fall, and there's going to be around about 25 to 30% drop in equity prices throughout 2023. And in addition to that, I think we're going to go into recession. Now, talking about recession, there's never been a recession when there's been full employment. When there's full employment, there's not a recession. At the moment, not only do we have full employment, there's actually an over demand for labor. In other words, the supply of labor is short, but not in every sector. So in every sector, you've got different demands for labor. So in the high-tech sector, it's been overmanned, it's oversupplied. So there's going to be layoffs in the high-tech sector, but there's other sectors that are short of labor. For example, the travel industry, they're desperately short of labor, and they're looking to get more and more staff on board. So there is shortages in certain sectors. There's not a overall excess labor. There's shortages in certain sectors, and as the unemployment number came out on Thursday in the US, it indicated again that unemployment is going to fall even further in the US, and probably going to have the same in Europe and in the UK. Okay, so you've got full employment environment, and that is one of the defensive mechanisms against recession. All right, if unemployment rises, which it could do, but if it was to rise, then you're going to have a situation whereby you're going to have a major recession. Okay, so I think unemployment will rise in 2023. Probably in the third quarter, you'll have a rising unemployment number as corporate earnings come in less or lower than expected, and they're going to have to lay off staff in order to match up to their profitability. So that's one of the things that's likely to happen in 2023. In addition to that, there's probably going to be regulation regarding the crypto sector. The crypto sector, cryptocurrencies, are desperate to be regulated. I mean, the governments need to regulate them, especially if they're going to incorporate them as part of the overall payment structure within the economy. They need to be regulated. At the moment, they're not regulated, and therefore they're used by everyday individuals, they're used by mafia, they're used by gangsters, they're used by criminals, drug dealers, etc. So it does need to be regulated. I think they're going to have major problems regulating it because it's more of a hidden transfer, hidden payment system, and it's very, very hard to trace where those payments are. You've got to do some serious forensic accounting in order to get those payments analysed and find out what's the source of them, and do they really belong to criminals and gangsters and drug dealers and terrorists, etc. It does need to be regulated. In my opinion, it's going to be easily 2-3 years before the crypto sector is regulated, and there is a view that cryptocurrencies are going to sink